Now we're going to get into the details of cash flows from investing activities. Remember, this includes long-term assets, selling and acquiring them. To prepare the investing section, we need to analyze these accounts to determine the activity. Using a T account is very helpful. Also, if a gain or loss appears on the income statement, a long-term asset has been sold. So we need to practice placing items in our T account. So what we have here is a big T account called plant assets, net. So what the net means is net of accumulated depreciation. The reason we would want to do this with one giant T account for plant assets is that it's much easier to do this with a few accounts than it is to go through hundreds of thousands of transactions that affected these individual plant assets. So let's begin with the easy part. Where is the plus on this T account? Since these are assets we're talking about, where the plus goes on the debit side. And of course, that means the minus is on the opposite side, the credit side. Where would we place the beginning balance? Beginning balance in the T account is going to go in the upper left. If we acquired some plant assets, where would we put that number? Acquisitions would go on the top left, on the plus side, obviously. And if we have depreciation, where do you think that would go? Well, depreciation is going to be offsetting the value of the plant assets, so that goes on the top right, on the negative side. And if we have a sale or disposal of a long-term asset, where would that go? Obviously, that would go on the negative side, the top right. And finally, where would we place the ending balance? Ending balance goes on the bottom left. So, as we're working through these problems, if we have 4 of the 5, we could find the 5th missing one. So let's get some practice with journalizing selling assets. Let's assume it's August 3rd and a company sold land. The land originally cost $40,000 and the company sold it for $50,000. What's the journal entry going to look like? Well, we know we're getting cash, so cash is going to go up by $50,000. We know we have to get rid of the land account, so here's the T account for land. How do we get rid of that land account? We have to put $40,000 on the credit side, and we also need to journalize that. Now the transaction does not balance. The balancing amount obviously is $10,000 on the right side, the credit side, but what account would we assign to that? Well, if we sold land that cost us $40,000 and sold it for $50,000, we have a gain. We also know that's a gain because the balancing amount was on the credit side, and gains are like revenues. They both have a normal balance on the credit side. So how would this transaction affect the statement of cash flows? Well, let's just look at the cash portion. The $50,000 increase in cash would appear in the investing section, and since cash went up, it would appear as a positive number. But the gain on the sale would have to be backed out of the operating section. We cannot include, remember that this $50,000 includes the $10,000 gain, so we cannot double count that gain. The $50,000 is already in the investing section, so we have to remove the $10,000 from the operating section because this gain is already embedded in net income, as we talked about in the previous video. So to calculate the cash generated from selling assets, You could look at the journal or the cash account in the ledger, find which transactions involved a sale of assets, and add them up. Remember, the goal in this scenario is calculating cash from selling assets. But again, this could involve thousands, if not hundreds of thousands of transactions. It would be quicker to analyze one large T account for all the plant assets to calculate the cash received from the sale of assets. So we're going to learn how to be way more efficient using this shortcut method. So here's our scenario. Given this information, and now notice down here in the lower right, we've got two types of assets. We've got mowers and the depreciation on the mowers. We've got a truck and the depreciation on the truck. So we've got two long-term assets. And here is our income statement. Now notice on the income statement, we have depreciation expense and we have a gain on the sale of plant assets. And the result was a loss of $1,000. And then down here in our journal entry is just the placeholder for a journal transaction where we sell plant assets. We know we're getting rid of plant assets because the plant assets are being credited. We know we sold them for cash because cash is going up with a debit. And we know we have a gain on a sale of plant assets. Why do we know that we have a gain? Because it says so here in the income statement. So if we can figure out two of the three, then we can calculate the third one and save us a bunch of work. So given all this information, we want to calculate the cash amount. So what we're going to do is we just need to figure out the gain on sale, which we already have, and then we need to figure out how much the plant asset account went down, because that's what this credit represents, the plant assets going down, being sold. So since our goal of calculating cash, since calculating cash is our goal, like I said before, if we can figure out the other two, then we know how much the cash was. So do we know the gain or the amount of plant assets sold? Well, we know the gain. So we can plug that into our journal entry. So we've got one of the three numbers. Now we need to figure out how much the plant assets account went down with this credit. So to do that, we're going to make a giant T account. So we're going to take our mowers and truck account and our accumulated depreciation accounts and combine them all into a single plant assets account. So we're going to take the mowers, place that on the left. We're going to take our truck, place that on the left. We're going to take our accumulated depreciation on the mowers and place it on the right. Why? Because this account is called plant assets net. It's net of the accumulated depreciation. And we also need to move over our accumulated depreciation on the truck. So now we need a total. Don't forget our pluses and minuses. So what's our new total? 61 minus 15. We've got a balance at the end of July of $46,000. This is a typo. It should be July 31st. And we know it's the end of July because that's what our income statement says. So now this is kind of a busy T account, so we're going to tidy it up by only showing the balance. Next, we need a few more points of data to be able to calculate the plant assets sold. Remember, this T account, this credit down here of the plant assets, that represents the plant assets being sold. So here is some more information that we need. Plant asset net of depreciation at the beginning of the period was $21,000. So in this T account, where would we put the 21,000 beginning balance. We would put it on the top left. So we have our beginning balance. We need some more information. Cash plant asset acquisition, so our purchases of plant assets during the period was $31,000. Where in the T account would we place acquisitions? That would go on the plus side. And now notice I'm labeling it to make it easier to remember where these numbers come from. And we have one more piece of info that has not been used, depreciation expense from the income statement. So here's our depreciation expense, $2,000. So where on this net plant assets T account would that go? Remember, net assets is cost of assets minus depreciation. So obviously the depreciation expense is going to go on the negative side. Depreciation from income statement. IS stands for income statement. Now we can calculate the sale of plant assets. So this makes sense. We started off with 21,000, we purchased 31,000. We have $2,000 of depreciation. We know we sold some assets, some plant assets, because we have this gain on sale of plant assets, and we ended up with $46,000. So how would we calculate the missing number if we have 4 to the 5? Well, one way to do it is to write out the T account formula in words. We got the June 30th balance plus purchases minus depreciation minus sales gives us our ending balance. Well, now we can just plug in the numbers. June 30th balance was 21,000. Purchases was 31,000 minus the depreciation of 2,000 minus sales, and that's the unknown. So we're solving for X, that's our X, equals our ending balance of 46,000. So doing some simple algebra, $50,000 minus sales equals $46,000. That means our sales were 4,000. Now just to double check your math, you should always plug that in here and see if that makes sense. 21 plus 31 is 52. Minus 2,000 minus 4,000 gives us 46,000. So that makes sense. Now remember, this $4,000 represents the sale of assets, which we can place there. And it also goes down here in our T account, our journal transaction, to represent the amount of plant assets going down because we sold them. Now, the last thing to do is calculate the cash received from selling the plant assets. Now, this is really easy. If we sold $4,000 of assets and had a $1,000 gain, in other words, we have this journal transaction, what's the balancing amount? Well, we must have received $5,000 of cash. Now we can complete the investing section of the statement of cash flows. Remember, this is just a partial statement of cash flows. We're only working with the cash flow from investing activities. So we need to put we need to put in the investing activity section, remember, we need changes to long-term assets. So over here, were there any changes to the long-term assets? Well, yeah, we purchased $31,000 of plant assets. So we place purchase of plant assets, and if we purchase them, which way did cash go? Cash is going down because we purchased them. Now over here, do we have any cash from selling the assets? Yes, we do. cash receipt from sale of the plant assets. Now, don't use this $4,000. That's not the cash amount we receive. This $4,000 is the cost of the assets that were removed from our T account. The cash amount that we receive is down here in the $5,000 in the journal entry. Now we can calculate our net cash used for investing activities. A negative 31,000 plus 5,000 gives us a negative 26,000. So in this company's investing activities, they are using cash. And what do they use cash for? The net amount of 26,000, because they are purchasing more plant assets than they are selling. So here's a summary of our plant assets. Here's the T account. Remember, plant assets is cost of assets minus accumulated depreciation. I should say net plant assets is cost of assets minus accumulated depreciation. And when we're calculating this giant T account, we get depreciation from where? We get it from the income statement. And where would we get the beginning and ending balance of our plant assets? You get that from the balance sheet. And the gain on a sale or a loss of gain or sale of plant assets comes from the income statement. And then once we calculate the amount of sales, how much our plant assets were lowered by at their original cost, that can be placed down here. And then once we have these two numbers, we can calculate the cash generated from selling our plant assets. And that would go on our statement of cash flows as cash receipt from sale of plant assets. So in our homework, this sale number or the acquisitions will be given to us. We just need to solve for the other. So this is kind of like a logic puzzle. Now the financing activity section will be easier than this. Fortunately, this was kind of convoluted, but with practice, it gets easy with repetition.